Okay, good morning, everybody. Happy Tuesday. We got Mark Reilly here with us this morning, and he's going to talk about health insurance for independent contractors like ourselves. He's going to give us a good overview here. And, now that it's open enrollment season, we thought this would be a good thing to talk about and give you guys some options. So I'll hand it over here to Mark and we'll get started.
All right. Well, thanks, Brooks. And I appreciate the opportunity to spend a little bit of time with you and go over the landscape of the health insurance industry. There's been tons of changes over the last 7 to 8 years. So I won't go back too far, but kind of give you an idea where we are today. And you have basically two options. You can go direct to the carriers, which unfortunately in Central PA, we don't have that many companies like some states where they may have 10, 12 providers. We maybe have 4 or 5 providers. And then the other way that you can access individual healthcare is through Penny. Used to be healthcare.gov, but Pennsylvania changed and went to their own exchange, which allowed them to put a little bit more control in what is being offered, pricing, et cetera, et cetera. So the only time we would recommend someone to go to Penny is if you would be eligible for a subsidy or what they refer to as the advanced premium tax credit. Basically, they're going to give you money up front to help pay your premium, and that will offset dollar for dollar any tax that you're going to pay. And I'll get into that in a little bit. But the companies that we have, both on and off the exchange, we have Capital Blue Cross, we have Geisinger, we have Highmark, and we have UPMC. And when I say the industry, what you have access to, and realize that every county has a different plan. So I live in York County, Camp Hill mailing address. Literally, I'm just a couple hundred yards from Cumberland County, but I must buy my product or my health insurance in the zip code where I live, which would be York County. So York County plans will be different than Cumberland County. Not always the same, or not always that case, but in most situations, there are differences. So, and that's difference in pricing as well as plan design. Some of the plan options that you have, and these terms have been thrown out over the years, PPOs and HMOs and EPOs. So just to give you a quick overview, PPO is a preferred provider organization. That simply states you can go anywhere you want, anytime you want, to whomever you want. What will dictate your level of coverage is that doctor in the network or is that doctor outside the network? When you have an HMO, the Health Maintenance Organization, you don't see too many of those around, but they are still here. And that is you must go to doctors in the network to receive coverage. If you go outside of that network, you will be responsible for 100% of that payment, except for emergency. If you're in an auto accident, you have a heart attack, something like that, wherever you go will be considered in network. So that's not a non-issue. And then the other one you have is something that's starting to come out is called EPOs, and they're exclusive provider organization. And basic difference here is they've taken a PPO and said, okay, there are certain doctors in our group that are better financial arrangements for the insurance company. So they're going to give you that discount and pass it along and charge you more for those that are not as favorable. So it is a version of a PPO, but it does have a skinnier network than a true PPO. So just be aware when you're going out there and you see EPOs or PPOs, what you're buying. Because most people see, oh, Capital Blue Cross, Highmark, oh, great, no problem. And then they come to find out that their doctor may not be in that portion of the network, and they just have to pay higher copays, higher deductibles, and maybe co-insurance as well. The other plan, the design that you have out there, they talk a lot about this for tax benefits, and that's the HSA qualified account, health savings account. In essence, the way these plans differ than the others, you are 100% responsible for every cost up to that deductible. So if your HSA plan has a $3,000 deductible, you're going to pay 100% of the doctor visit, 100% of the prescription, 100% of the surgery, whatever the case may be, up to that amount. And in the event that you are married or you have a single person with a child, and the family deductible would be $6,000, you must satisfy that full $6,000 before $1 is paid. So you just need to be aware. It's really great for a younger, healthier person, someone that's a little bit older that takes some medications, unless they're truly all generic. That may not be one of the best plans for him. And then you have a variety of deductibles. So you can take a plan that has no deductibles all the way up to a plan that has a $9,100 deductible. So you try to tailor the plan that makes sense for you financially, but also from the standpoint of delivery at time of service. So am I going to get something of value when I go to have that procedure, that doctor visit, et cetera? So the way that the premiums are derived, really only three ways. It is no more male, female. It's simply what your age is, what your zip code or where you live, and whether you're a non-smoker or smoker. And every person has a rate. So if you're 25, when you turn 26, it's a little more expensive, 27, 28, and it's basically a step up in rate. So those people that are 25, 26 will pay a lot less than someone that is 64. If you do turn 65, you will be eligible for Medicare. I'm just going to talk about the under 65 plans today, but for those that are nearing Medicare, your open enrollment ends on December the 7th, but the plans for under 65 open enrollment ends December the 15th for January 1. One of the other interesting parts, all individual health plans now are calendar plans. So if you do not buy insurance effective January 1, and let's say in March or April, you're like, well, you know what, I probably should go ahead and get coverage. You cannot get coverage without a qualifying event. So just to be aware of that. And once you choose a plan, you must keep that plan, God bless you, unless you have a situation where there's a life-changing event. You move, you get married, let's say your spouse would lose coverage, those types of things. So, also, one of the big benefits of the Affordable Care Act is that there are no pre-existing conditions. So if you have heart disease, if you have cancer, if you're diabetic, and you want to change plans, there's no longer that concern. Well, but I have to, if I choose that plan, then I have to wait for my benefits to kick in for a year or two. That is not the case anymore. So you have coverage from day one for whatever ailment you may have. Now, I did mention about that advanced premium tax credit, and I think it's important because when COVID hit, what they did was they raised that level of income for an individual, family, et cetera, to a much higher level to get people to qualify for health coverage. So that is something that before, if you made $100,000, we would have said, you just don't qualify, you make too much money. Well, today, that may not be the case. So it's something that we can run. You can actually go on penny.com and do it yourself. You can give us a call. The great thing is by going through us, you don't have any additional premium, and we can research the whole market both on and off the exchange for you if you have an interest level in that. But so the advanced premium tax credit is only available on Penny. So if you go direct to capital off the Penny exchange, you are not eligible for that tax credit or that subsidy. So, and in basic terms, a tax credit you can take in advance to lower your monthly insurance premium. You'll be eligible based upon your projected income and your household information. So if you are married and let's say your wife stays at home or your husband stays at home, you have no kids, it would just be on your income, but the two of you would be eligible to qualify as a household. And the advantage that we have as independent contractors, they look at the net, not the gross. So that is substantial. So you can make $100,000 and you may only report $40,000 between all your expenses, your deductions, et cetera. So your income for health insurance is going to be based on that 40,000. So you may qualify for a premium tax credit when you maybe in the past didn't think that you were eligible to do so. So this is the one time it benefits you. Obviously, you know that it hurts you when you go for a loan and you say, but I make 100,000. These are fictitious expenses. The government just allows me to take mileage at 65 cents and I write this off and that off. So for once, it's going to actually benefit us to take those deductions. So if you take more, we always estimate the income, right? So if we estimate that it's going to be 100,000 and the income actually came out to be 80,000, you actually get more tax refund back. If you are on the other side and you estimate 100,000 and you make 120, because in our industry, especially yours, you don't know if you're going to close that house maybe in November, December, what have you. So you may get a big hit towards the end of the year. But if you make more, you just simply get less of your tax refund back. And if you actually owe taxes, you'll just owe a little bit more, but you would have gotten that reduction of tax credit throughout the monthly payments. So I did just a quick example just to kind of give you an idea. If 55-year-old living in Cumberland County making 100,000 a year would get $364 a month estimated tax credit based on a plan cost of about $1,072. So again, getting $4,000, from the government, not a bad thing when we pay all that tax in there. So, and give you another example. Let's say you only make 50,000. And again, I'm talking about the Schedule C profit, not the gross number. In that particular case, you would receive $778 per month of estimated tax credit based on $1,072. So in essence, you would pay literally $250 for your health insurance per month at age 55. So there's a ton of things that are going on that the last 2-3 years have really broadened and expanded that marketplace. Now, here is a downside. If you are married and your spouse has coverage available, it just has to be available from her employer, whether that person takes it or not, you are not eligible for the subsidy. So if your spouse has coverage available, whether they decide to take it or not, you are not eligible for the subsidy. The government states that because of you have available coverage, we want you to go on that plan. We don't want to pay for it. The other thing that we've run into is Medicaid. So Medicaid is a state-run program that basically helps the lower income people out. Well, part of the advancement of the Affordable Care Act, they expanded Medicaid, meaning that income level rose because the feds wanted the states to pay more of the health insurance than the federal government. So we may have a situation where, let's say, you earn $50,000 gross, so make a decent living, et cetera. But because of all your expenses and so forth, you only make $20,000. Well, you will not be eligible for the penny. You may have to go to Medicaid. So there are some downsides with the penny program as well. The upside is more may qualify. The downside is because of all the expenses that you can write off, you may be in a situation where you're below that level, and then therefore would only qualify for Medicaid. Now, you could still go buy the coverage direct with the healthcare company and not go to Medicaid, which is an option. So that, just be aware of that. The other portion is you may have heard of CHIP, which again is another Pennsylvania program that was designed initially for kids and was to try to help parents afford the health care for kids. So that has been expanded as well. That also used to be, some of it can be free, and some you may pay a little bit for. So there's a variety of options out there. You just need to understand the landscape and be able to navigate through that. we're happy to help you out in any regard. So that's really the medical portion of it. And then I'll just touch on two other things, dental and vision. Dental, you can purchase on Penny. However, vision benefits are not on the Penny program. And I'm talking about for adults now. I'll get into the pediatric dental. But for dental and vision coverage, you can buy the dental on Penny, and you can buy the dental and the vision off of Penny too, going direct to one of the providers. So there's up to 8 providers, depending upon the counties that you may live in. And the dental plans cover very basic, just regular cleanings, all the way up to major, as well as orthodontia. But the max benefit typically for the year is $1,000 or $1,500. And for the orthodontia component, the max is $1,500 for the lifetime. So they give you a little bit, but not a lot with regard to that. And understand that pediatric dental, for those that are under the age of 19, that is embedded in every health plan. That was part of the requirements of the Affordable Care Act. So you do have, for anybody that has kids and they have on the medical plan, it's very basic dental coverage, but it will pay for a cleaning. It'll pay maybe for an x-ray. Usually you may get a couple $100, $300-$400 a year benefit from it. But if you're looking for full-blown dental, you can put them on the dental plan, but you would pay whatever that portion is. So, and then for the vision benefits, as I mentioned, one of the ones that we use a lot is Capital Blue Cross. It's $9 a month, and you get a doctor visit paid for. You get glasses, contact allowances, et cetera, et cetera. So that's kind of the full landscape of the health, and I'll call related benefits, the dental and the vision. And happy to entertain any questions, comments. A lot of information in 18 minutes, so.
Mark, one question I had, you talked about if people miss the open enrollment period, are there options? I briefly read up on a little bit of that before this meeting, and I think there are some short-term options. Do you know of those?
There are less and less today. Pennsylvania, we used to represent about 15 different health insurance companies. And when the Affordable Care Act became law, if you will, a lot of these companies got out of the business and the short-term options became obsolete in Pennsylvania. So a lot of the companies got rid of it. There are some that you can still purchase. They are few and far between. But there are some options that are out there. But I would say that your best bet is, if you need coverage, is obviously you've got 2 weeks to take a look at it. And if your spouse or does have coverage, evaluate whether it makes sense to go on a company plan or to buy it individually. So a lot of times employers, depend upon the size. If your wife or husband works for Select Medical or one of those big, large companies, they're partially self-funded. So their rates are a lot different than what you buy individually. So sometimes it makes sense even to be covered under the spousal plan, even if you have to pay 100%, because that cost is more manageable than the individual. So, and the other question or thing that popped in my mind. So if you have, let's say, 3 kids, in the traditional years ago, it used to be you had family coverage and didn't matter how many kids you have. Now everybody has an individual rate. So it'd be me, my wife, my child 1, child 2, child 3, all of those would be added together. And all of us would have an individual rate based upon our age and the plan that we chose and the county where we reside. So, but there are options if you do miss it, but they're very few and far between. And if you need it for healthcare coverage, the catastrophic plans, the short-term medicals don't cover a lot. The only other thing, and I've mentioned this a couple of times, if you are on medications, you may have heard a couple of these programs where you have goodrx.com and how does that work? And so I'll give you a personal experience. I take a couple meds. I was with Rite Aid before. I went from Rite Aid to CVS. I saved a little bit of money, same prescriptions. I went to Giant Pharmacy, saved even more money on the same prescriptions. And then I looked into GoodRx.com and went from paying, $40 for a 3-month supply to $16 for the same 3-month supply, not using the insurance, using the GoodRx.com. So there are some other options out there. So if you're on medication and they're generic in form, take a look at GoodRx.com. You go to the same prescription. In fact, I talked to my Giant pharmacist and I said, explain this to me. I said, I'm in the insurance business. I said, why is it more expensive for me to use the insurance than it is a non-insurance GoodRx.com? And she said they cut out the middleman. So there is a level of savings that they get because of the volume that they buy and the advertisements that go there, that the prescriptions may be a little less expensive. Now, if you're on a cancer drug, if you're on a name brand, it's probably not going to benefit you, but I would check it out. And again, there's no cost to do that. That's just an added benefit that the industry has right now. But again, GoodRx.com. And you just put in what it is, a tablet, a capsule, 30 milligrams, 50 milligrams, whatever it may be. And you'll be surprised. And again, we can help you out in that process too. So, we appreciate being a partner of First Advantage, and happy to help you all in any way we can. So.
Hi, Mark. This is Sherry Anderson.
Hi, Sherry. How are you?
Good.
Good.
So my husband and I were both self-employed. So this current year, we got our insurance directly through Capital Blue Cross.
Okay.
But the year before, we went through Penny. But at the end of the year, we got something called a 1095-A form.
Yes.
You file or do something with your taxes. And I don't remember the reason. It seemed like then we ended up not even getting the subsidy, or we had to add money or something. Can you explain what that form is and how that works?
Yes. So there is a requirement that you show on your tax return that you had qualified insurance for 12 months. Used to be a penalty, but now you don't have that. But I can't speak to the reason why you wouldn't have had the subsidy, other than you may have made more money than was allowed to receive the subsidy. But if you buy the coverage on Penny, that is the only way you can get the subsidy. So when you went to go direct, then you forego the ability to get that premium tax credit or a subsidy. It's the same thing, but they just like to say advanced premium tax credit because it sounds better than a subsidy, but it's still a subsidy. So
when you file your taxes at the end of the year, the lower amount you're paying each month, that subsidy, is that subsidy amount added as income on your taxes?
No. So what happens is it is taken as a tax credit. So if you, in the example, let's say you paid $1,000 less than what you should, if you were getting money back, they would keep that $1,000. If you were still had to owe money in, you would pay that $1,000 to the government. So what they do is they basically just adjudicate at the end, saying, what should you have paid? What should the government have paid? And are we upside or not? And then they'll true that up at the end of the year. But they won't know that until when you file your return, March, April timeframe.
So whatever the subsidy amount is, you get, let's say it's a total of $5,000 for the whole year. So you really are paying that back to the government. Either you owe more money in the end, or they take it out of what they would owe you.
Not exactly. So let's say you hit the number right, perfect, and you were eligible for a $5,000 tax credit. If you took that throughout the year, then you would pay no more or no less than what your normal taxes are. So you would have truly have received a $5,000 tax credit, meaning that if you had not purchased the insurance, you would owe $5,000 of tax to the government. And they're saying, we're going to allow you to use that $5,000 that you would have paid in as taxes. We're going to allow that to be forgiven, and then you keep that Therefore, you pay for the health insurance, but you would have received a $5,000 benefit.
Okay, thank you.
You're welcome. But it doesn't affect your taxes.
Okay.
From the standpoint, it's not a deduction or anything like that.
Okay, thanks.
Yes, Jim.
Yeah, just had a quick question. I am on the Penny program, and when I initially signed up for it, I guess it's been 3 or 4 years ago now, they required me to upload my tax returns and financial information.
That is correct.
Right, and in every subsequent year, they haven't asked for it, but they've adjusted the subsidy, and it's been a good deal for me. I guess after the initial time, there's no need to provide more information unless they ask for it, correct?
Well, yeah. So what happens is when you sign up there, you have to check yes that you're allowed the government to look at your tax return. So once you are set up as you found, it's seamless. As long as you don't have another tax situation where filing separate and those types of things, or you have another tax filer living with you. That's the only time it would be a problem. But if you submit your taxes, they're going to look at it each and every year thereafter, and it is seamless. And again, you're only going to pay what you owe based upon your income at that time. And because of being an independent contractor, where you have the availability to deduct everything on your Schedule C, I mean, you could have 30, 40, $50,000 worth of deductions between car, advertising, you name it, whatever the other, marketing cost and so forth. And they will see all of that. And then they'll take that bottom line Schedule C profit and then take a look at that versus what you should have paid. And if you estimate it pretty close, you're going to get, right there. Again, if you're going to be a little bit less, then they'll give you a little bit more tax refund. If you make a little bit more, then you're going to get a little bit less.
Yeah,
but thank you. Yeah, thank you.
I have a question.
Yes, Joe.
Picking the right plan is not easy for me. If we were to employ or contract with you and your company to look at the best plan for me, how does that work? How do you guys make money? I mean,
Yes. So whether you go direct to the company, direct through Penny, or direct through myself, the premium is no different. So we are paid by the insurance company, and typically we're paid $20 per month for a single person. So if whatever the premium would be, that your premium is the same regardless of whether we are involved or not. So certainly happy to go through that with you. We are Penny certified, so we can go through Penny to pick a plan with you. We can hop off the exchange as well and pick a plan, but there's no downside using someone like myself or our firm. It can only benefit you because we have access to them all, and it doesn't matter to us what plan you pick and choose as long as it's the best for you and you understand how it works from the premium tax credit, deductibles, co-insurance, and those, because this is what we do. I mean, we're in the insurance business, so for us, it's easy to look through, and I can decipher the plans in about 3 minutes what may be best for you. But for you to go through, you may not realize that there's a 20% co-insurance after the deductible, and that now you've got a maximum out of pocket of $9,100 when you thought the deductible was only $2,000. So all those things. And how does the prescription come into play? Is it just coverage for generic only, and you don't have coverage for name brand? And these are all the differences that they have in the plans that I think it's tough for someone not familiar with it to know. But I'm happy to meet with you again, whether we spend an hour or two, and if you do nothing, that's fine too. I'm committed to helping, the team, and, y'all have been a great partner of ours, and whatever we can do to help you individually and corporately, we're here to be that resource. So.
And how would are we getting an email or something, how to reach you and that sort of thing?
Yep, I'll coordinate with either Brooks or Aaron and send some information out with our contact information. And I mean, I'm in Camp Hill, so I can come out to the office. You can come in our office. We can do it over the phone. We can do it over Zoom. Whatever makes sense for you. We're happy to do that. So
Great, thanks.
sure. Anybody else? Well, I really appreciate the opportunity and the time, and hopefully it was informative. And again, if we can be of help to you in any way, or somebody that friend or family that's struggling with the health insurance side, we're happy to be that resource for them. So,
Mark, thank you. My dad and I, just to let everybody know, have been working with Mark since the 90s in the Jack On days, when he started out with Jack On Insurance and then Maui Insurance, now Reilly Insurance. But we handle all of our personal, our properties, our cars, our business accounts, everything's with Mark. And the main reason it is when we have a problem, he's the guy we call. We talk to him, he helps us through everything. So that support system for him and his office, and Laura Zodi and everybody else that works with his company, that's the reason we use him. And Mark, thank you for all the years of partnership, friendship, and everything. You've done a great job in the insurance for us. Thank you.
well, I appreciate it. So
Yeah.
thank you very
ditto
much.
here too.
Thank you, Gene.
Okey doke, Brooks, or Aaron, you have something you want to bring up? Oh, Matt Wall, go ahead.
We have all our insurance with Reilly Insurance.
Thanks, Matt.
I bet you do, Matt.
Yeah,
Just
we're
as a
very
little-
blessed to have Matt's wife, Jen, who is just dynamic and outstanding. One of the brightest spots of our agency for sure. Joined us several years ago, and she handles our personal lines team. She's our team lead on the personal lines side, and does home, auto, rental properties, flood. She just is outstanding. So always a smile on her face. So
Well, she's got a husband like Matt. I mean, come on. Hey, no, thanks for everybody joining in today. Mark is great, as everybody said. I have all my stuff with him as well. He does our healthcare coverage here for the office as well. I just wanted to bring up that we're doing the Cookies and Cocoa with Santa December 10th. It's coming up in 12 days, so make sure that you're inviting people. We want it to be the best one yet. We're having a photo booth, we have ornaments, we have hot cocoa, so it's going to be a really fun day. If you want to come and get a picture with Santa, you can absolutely do that. Also, I'm going to put out an email today for our holiday feast, also known as the Pig Out. That's going to be December 20th, so mark that on your calendars. And I think that's it for now.
Sounds good. All right,
awesome.
guys.
Thank you again. Thank you.
All right.
Roll
Yeah,
Tide.
thank you, Mark,
Roll
for your
Tide.
time. Yeah, roll time.
Thanks.
All
Mark.
righty, well,
All right.
we'll wrap it up.